So with that said, my very special guest today is Mr. Kevin Bassett, CPA, and so many more things behind that. I know Kevin personally because I've worked with him, I think, over the last 7 or 8 years, and he has completely redeveloped, reshaped what the Massimo Group was and what it is today from a point of strategic positioning in every facet financially and from a tax perspective to assist us in our growth and assist us in our tax planning and putting us in position, more importantly, to take this hit that we're taking like everyone else and come out on top. So, Kevin, welcome, and thank you so much for your time.
Yeah, my pleasure. Good to be here, Rod, as always, and a pleasure to work with you. So what we've got today is this is a webinar series that we've been doing for the last 3 weeks for our clients. We call it the COVID-19 and Recession Toolkit. What we're attempting to do here is let everyone know the resources that are coming out in tax and stimulus changes as a result of CV-19. And Recession Toolkit is a concept we developed last recession, giving our clients the tools they need to navigate through a recession. I call it a battle plan. And first of all, I want to recognize that, yes, this is a recession. When second quarter ends, I'm confident the technical definition will have been met, but we want to make sure folks have the tools, and I always tell folks to have a battle plan with both offense and defense when you go into a recession. On the plus side, I have, in my career, never seen the Treasury Department move so quickly as they have here, and we've got a lot of resources, both from them and Congress, to help us get through this. So let's jump in and do just that. I'm going to start with a few of the things that have passed before the CARES Act of last week. CARES Act is where we're going to spend most of our time, particularly the payroll protection loans, which you all will be eligible for. So we're going to talk about that, but I'm going to quickly go through a few of these other things. First is the FFCRA that does provide family and sick leave. So I recognize that on this call we have many contractors, and we also have folks that have businesses with employees and contractors on it. So I'm going to do a few minutes on that, but I'm going to spend most of the time on the stimulus available for contractors. Okay. So this provides family and sick leave. What it does is they said if you are an employer with 500 employees or less, this is a new mandate because most companies less than 500 employees don't have family and sick pay packages, but they're mandating it if you're under 500 employees with a few exemptions. One, if you have less than 50 employees, you do not have to do this. You can file for an exemption. We don't know what filing for exemption looks like, if any. And they said, please don't contact them with anything about that because they haven't made their mind up. But Congress told them they have to do something. But you got to give your employees $511 a day sick pay for 10 days if they come down with CV-19, and family leave if they have to care for someone or have to be home with a child. That's capped at 200 a day and can go up to 10 weeks for a 10K max. The effective date of that was April 1st, yesterday. Again, if you've got less than 50 employees or no employees, you opt out and it doesn't matter. But if you do this, if you do either have to or choose to participate in this, you get 100% payroll tax credit on your return. Now, what their payroll tax credit means is you're actually reimbursed for 100% of the costs of what you pay these folks, including if you put yourself on family leave. So just a little FYI. What has to happen is you pay for family leave, for example, pay them $200 a day up to $10,000. And then when you file your second quarter payroll return, they will give you a refund for $10,000. You don't have to pay any payroll taxes on the $10,000. So it's a pure $10,000. You can keep benefits in place, but then they will cut you a check for the $10,000. But you won't get it till July or August. Therein lies the catch. Again, it's a mandate for all businesses less than 500 employees, but you're exempt if you've got less than 50 employees, and another exemption for healthcare. And they said it is available for self-employed, which is a lot of you folks on here, but they have not given us the guidance on how that is available and how to implement it. So that's the FFCRA. Since the payroll loans came out, which we'll spend most of our time on, I do think this particular thing, I said when it came out, it was an opportunity for folks with less than 50 employees. Since the payroll thing came out, I would say this is much less attractive. Okay. Moving forward from this, another thing that happened is we've gotten an extension in tax deadlines, both to file and to pay. So where normally April 15th was our 1040 deadline when we had to file, and when any taxes on a nice 2019 tax year, if you had a good year and owed some money with your April 15th return, you also had to pay it then. Well, they've given us an extension on both till July 15th. An extension to pay on balances for individuals up to $1 million. C Corps, if you got a big company, they can defer up to $10 million. But for individuals, it's everything up to $1 million you don't have to pay. If you're one of those lucky individuals that had a huge year and you owed $1.5 million, you have to pay the $500,000 in April, and the other $1 million you would pay in July 15th. But nothing is due, no extension needs to be filed, and no payments till July 15th. Now, if you look at the bottom two bullet points, we also do not have to make any first quarter estimated tax payments until July 15th. Now, a lot of folks have been hammered, so if your CPA already did your return and said you owe money in Q1, a couple of things, I would ignore it, because if your numbers are down, then don't pay that safe harbor payment that us CPAs send out to you, because that safe harbor payment is based on 110% of last year's tax. So I would put that in the litter box and ignore it if your numbers are getting hammered like a lot of folks are. What you want to do is recompute and see if anything is due July 15th. That's when first quarter is due. Now, another funny quirk in the calendar, which I imagine they'll fix, and they've got a million things they're dealing with. Second quarter is technically due June 15th. I would also ignore that and just run a computation in July for what actually happened in first and second quarter and pay it all with that July 15th payment. Because if it's applied to first quarter, any excess gets moved forward. So I would ignore everything until July 15th. Get it out of your hair, worry about other stuff. Okay. Any questions on that, please use the Q&A, and I'll try to answer.
Kevin, we got a couple questions I'll ask you. Someone's saying about paying taxes for employees. The question is that within your company, if you have multiple locations, some brokerage firms have many locations, I'm assuming that's per company, correct?
Yeah, so it's actually an interesting question. So if we're talking about FFCRA, the previous slide, then it is total employees in your organization, 500 or less. Now, if you're in a franchise arrangement for food service, and I'll have to check hotel because it may apply to all hospitality in the travel industry, we're going to have a different answer with the payroll thing. That's actually a good question. But for this one, the family sick pay, if you take all your locations together, let's say if each individual locations you're at 30 people, but you put it all together and you're at 300 people, then this family and sick leave is actually a mandate. You have to participate if someone gets sick and or requests family leave to go care for a child. Now, interestingly enough, this thing passed literally 2 days before the first stay-at-home order hit the country, and since then, I think we're at the majority of our states at this as we record this webinar. Because of the timing, this family leave does not cover stay-at-home situations. I'll bet if a bunch of those mandates, stay-at-home orders had happened before this passed, that would be included in family leave. But the timing didn't line up, and this only family leave is if folks say, hey, they have to be home to care for a child since the schools or daycare is closed. If you're 51 or more employees, this is now a mandate.
We got a lot of questions, guys. I see the questions coming. A lot deal with the payroll program. We'll get to that. So
Yep.
Kevin, continue.
Oh, yeah, I saved the best for last. That'll be the main focus. So definitely, folks, I promise, that's where we're going to spend most of our time. Another quick thing that we'll get through. So as I said, the time to file has also been moved. With that, your IRAs and any retirement plan contributions also have been moved to July 15th. If you participate in HSAs, if you guys do that little trick, which is a great trick, that is moved to July 15th as well. So it gives you an extra time to pay those. One little caveat, not a CFP, financial planner, but the market is down. If you do actually have the cash, you might want to put it in while things are on sale. I have no idea what direction the market's headed, only that it's 25% cheaper than it was. A few other things. I know we got a bunch of real estate folks on here. So one, we have no word on the extension of filed or C Corp. So if you have a C Corp, that's still due April 15th. If you guys had S Corps and LLCs, taxes, partnerships, those were due back in March 15th before the stuff passed, so that deadline didn't get moved. And if anybody is on extension for those, still the September deadline still applies. The other thing is 1031 exchanges. And if you or your clients have 1031 exchanges that are open, at the moment there has been no movement on the 45 and 180-day timetables that apply to 1031 exchanges. But I bring it up. They did pass a Rev Proc back in 2007 that gave Treasury the latitude to extend those deadlines in the case of federal disaster areas. And this has mainly been used in hurricanes and forest fire situations where they've temporarily moved those deadlines for those affected counties. Now, we're in a federal disaster area now, I think the whole country, I could be wrong on that, So it is possible that those deadlines will get extended, but at the time of this recording, no movement on the 45-day identification and 180 days to close a 1031 exchange.
Kevin,
Yeah.
before you move forward, someone asked, can they cash out their Roth IRA without penalty?
That was a nice segue. So IRAs and 401ks, I told you there's an extension of time to put money in. Additionally, what they've allowed you to do is cash out up to $100,000 from your IRA without penalty. And then you still have to pay tax on it, but you have 3 years to pay that tax. Additionally, you have time to put money back into it, replace the money, not just 60 days, but they've extended the time period on that. Additionally, 401ks, if you have one of those plans in the past, the limit that you could borrow from your 401k was $50,000. They've raised that to $100,000. If you replace that money, then that would be tax-free as well. So IRAs, you can cash them out penalty-free. You've got 3 years to pay the tax, and you can also replace that money and possibly have it be a tax-free transaction whatsoever. Caveat, of course, if that stuff's in the stock market, this is probably a pretty lousy time to pull money from there, but that option is available. One other thing is, with the market being down, so another idea is if you aren't having to pull the money out, you could always consider a Roth conversion. That's a good idea when the market is down, and if your taxable income's down and you're in a lower bracket, you can do a Roth conversion at either a zero tax or very low tax conversion, and that can be very attractive as well. A few other things, we're going to move on to the CARES Act. Let's see, one did just ask, is there an extension of time to put money in the cash balance plan? Great question. If you filed your return by March 15th, your deadline already was March 15th. A cash balance plan is a business retirement plan. It is a phenomenal tool. So if your S-Corp filed by March 15th, you already would have made your contribution. It was due then. If you extended your S-Corporation, then you have till September, just as you always did. If you are filing as a single-member LLC and it goes with your 1040, then yes, that deadline has now been moved to July 15th. Good questions. When are set payments due? Those have now been moved to July 15th. Good question. So I think there was a question about S-Corps. I assume that meant deadlines. S-Corps were still due back on March 15th. And if you extended it, then the extension deadline of September 15th still applies. So actually, S-Corps were completely untouched by that particular deadline thing. How do you convert to a Roth if you always make more than you would qualify for Roth? So what I'm talking about is Roth conversions. Regardless of whether your income is $0 or $100 million, you can always convert a traditional IRA to a Roth. The income limits only apply to direct contributions to a Roth IRA plan. But don't forget, if you're above the Roth limit, you can always do the trick called a backdoor Roth. You can Google it, but basically you put money in a regular IRA and then do a Roth conversion. I do that every year for my wife and I. Highly recommend it. The question was, correction to above, S-Corp, not C-Corp. C-Corps, interestingly enough, they did not move the filing deadline for whatever reason. So it's still due April 15th, but you can always extend it to September, and that's what we're doing here. All right, can paid family leave for myself just be a proration? Okay, there is a question here on family leave. What happens if you have partial hours? They have not given guidance on if you're dropping to 2 hours a day. And I've had a number of folks, I had a question. I've got an IT company, and they send everybody home remote, and they think the lost productivity is about 2 hours a day. And they're wanting to know, can they do family leave for that? Because the kids are at home making a lot of noise. So they've given no guidance on that. So that's my knowledge is you're either on leave or you're not. So good questions. All right, I'm going to really quick go to the cash rebates thing. This is actually important. So in the CARES Act, you've probably heard on the news that a bunch of taxpayers are going to get checks in the mail. And here's how it works. It's $1,200 per adult. If you're married filing joint on the last tax return filed, then they're going to send a $2,400 check to the household. In addition, you'll get $500 per kid. Now, for individuals, it's if you make less than $75,000, you get the full check, and then it's phased down until you hit $99,000 in adjusted gross income on your last filed tax return. Once you pass $99,000 per individual, then your rebate goes to zero. If you are married filing joint, you double these. So households getting less than $150,000 get the full rebate, and then it's phased down till you hit $198,000. Again, this is adjusted gross income. If you're head of household, it's kind of in the middle. I think it's like 112 and below, 112.5, you get all of it, and it's phased out at 147.5. Here's the deal. They were going to base this on your last tax return filed. Unless you're on Social Security, you don't have to have a return filed. They're going to use your Social Security information. But for the rest of us that are filing tax returns, they're going to use the last one on record. So if your 2019 return was on extension, they will use the adjusted gross income and your filing status, married or single, and the number of kids on your 2018 tax return. And kids, they get the $500 that you get credit for any children that are age 17 or younger on your, as of January 1, 2020.
Kevin, let me take an example. I'm sure a lot of folks out there hire their children in their corporations or sub-EPs to do whatever, right? It's a common practice. Mm-hmm. So your child then has their own tax return, right? It doesn't matter what the age they are. If their taxes show less than 75K, which is most likely going to be the case, that child will get what?
If they are a dependent on either the 2018 or 2019 tax returns, then they don't get the rebate you do. Okay. If they're 17 or younger as of January 1st of this year. But I've got pretty cool examples here. Couple of one. So if in 2018 your income was below this limit, then great. You don't have, and your 2019 is on extension, then you don't need to do anything. You're going to get your check. If, however, 2019 had either A, your income came down to be below the limit, or B, you had some more kids, had another child or so, then you may want to hurry and get your 2019 return filed immediately. So we actually have some situations where we scrambled for our clients to get 2019 filed. We had some where their income dropped below the 150 grand. So we got them filed right away because otherwise they wouldn't have gotten a rebate. I have another one, my IT guy, his kid got out of college, was a dependent on his 2018 return, but he's out working in 2019 on his own. We made sure we got 2019 filed so he wasn't a dependent on the parents, got the kid filed with his own return. He's over 17 anyway, so it wasn't going to help the parents. And that way the kid's getting a full $1,200, right? We created $1,200 out of thin air.
Hold on. It's really important what you just said. It's all important, but this is applicable to a lot of you out there. You have a kid over 18 or older. They're not dependent, right? They cannot be a dependent, correct, Kevin?
Correct.
Yep. But who knows? They're in college. They're have a job part-time. They're not making 75K. They're eligible as well.
Yep, exactly.
But they got to file their taxes now.
Yep, to be on the radar. Exactly. They've got to get on the grid. Yep. So look at where your best situation is, and this is something you're literally going to have to file probably in the next week. We hustled and jammed out a bunch of returns this week for folks, and we created several $1,000s right out of thin air just by playing this trick. On the other hand, if your 2019 was a huge year and 2018 was lower, do not file your return until after you get your check. This is where you can play the system. This is a full rebate. You do not have to pay it back like in one of the previous recessions where it was like a prepayment of your taxes. It's free money. So play the system and get your free money here. So you had a child last year after taxes were filed. How do we update to get the extra $500? If you had your child in 2019, I would file your 2019 return immediately if you had an extra kid.
When do we expect these cash rebates to go out?
They said they're actually going to start cranking checks by the third week of April. I will say, in fairness, I'm not a political guy, but if Steve Mnuchin comes on with a press conference and gives specific dates, so far the guy is actually batting 1,000 on things that he says he's going to do that he's got control over. So he says they plan to start running checks third week of April. So we're telling everyone, try to get your stuff filed, like tax returns this week and next week to get on their radar. I mean, I'm guessing if you don't have file your 2019 return by next week, that probably won't be on the radar for this rebate, is my guess. So, but they said third week April checks start. All right, one other thing, if you have a company with employees, and even if it's just yourself, and you, of course, are having to remit payroll taxes and file payroll returns, the employer side of federal payroll taxes are now deferred for a long time. You get to hold on to your money. All of your 2020 employer side federal payroll taxes, you get to hold on until half of it January 31st, 2021, and the other half is due January 31st, 2022. So what I'm literally telling you is you've got almost 2 years to hold on to your 2020 employer side payroll taxes. Now let me define this. First of all, the way the law is written, it just says the SSI payroll taxes. I think that's a slight technical glitch. I think it's actually going to be Social Security and Medicare once the Treasury gets the guidance. So if that's true, that'll be that 7.65% federal employer side of the payroll taxes. Now, the employee portion of FICA and the employee withholdings, those still have to be remitted. Again, we're only talking about the employer side. And you get to hold on to it and pay it interest and penalty free by the end of 2021 and the other half the end of 2022. So they're allowing that cash flow to remain inside your company. Kind of a big deal. Now, I will say that the payroll companies, again, this just got signed into law last Friday night. Payroll companies, I haven't seen any that have been able to adjust their software quite yet. And I checked my QuickBooks updates when I ran payroll yesterday. They still haven't updated theirs either. I'm guessing this will actually be implemented by payroll companies in QuickBooks for second quarter. They're having to work their rear ends off on this. So a little update there. That's a way to hold on to some cash flow, including payroll taxes on yourself, by the way, the employer portion on your own salary.
Wait a minute, Kevin. I'm paying myself, I'm going to hypothetical number here, over $125,000. Let's say, whoever everyone's paying themselves. Does that apply regardless of what they're paying themselves?
Correct. Now let's use that example. Let's say you're cranking along, paying yourself $125. The taxes I'm talking about, that's almost 10 grand of employer side federal payroll taxes. About $9,600 is how the math shakes out there. So it's that $9,600 on yourself that you get to hold on to and not pay it till 2021-22. Hey, pop it in the money market, make a few bucks on it. But the reason they're doing this, of course, is they're assuming folks need the cash flow to get through this crisis or whatever we want to call it.
Right.
Now, if you have a bunch of employees, this can amount to a heck of a lot of money. So could be pretty cool. But again, it's just the employer side. So if you have 10 employees and you're pulling, payroll taxes out, their federal withholding and their FICA, the employee side, that still has to go in. And those are trust fund taxes. Don't mess around with those. One other thing, if you had a loss on your personal tax return for 2018, 19, or 20, and there'll probably be a lot in 2020 that have a loss, you're going to be able to carry that loss all the way back to 5 previous tax returns and get a refund, something that you guys might remember from the last recession. So you'll be able to carry that loss back and get some money. They also tweaked some other business limits. We won't go into that, but long story short, people are going to pay a lot less tax in 2020 if you're a business owner. So that's stuff in the CARES Act. We're going to jump into the payroll protection loan. Before I jump into this, I want to talk about one other thing that's a big deal, and that is expanded unemployment. It's an important preface to this. So if you're in a situation that your business just went to, really got hammered, and I've got a number of clients ranging from restaurants to dentists to eye doctors, because of these mandates, the federal government has essentially shut them down to nothing. Dentists and eye doctors, they can't see patients right now. So their business went to zero. One of the things they did is they expanded unemployment benefits. And this was really some legislation written by Senator Schumer. He calls it unemployment on steroids. And it's probably a pretty accurate description. And what it does is expands state unemployment benefits in three very important ways. So what it does is it takes whatever your state limit was. For example, for most states, their limit was, something under $400. Washington has a higher one, and a few other states do. But let's say your limit was $375. What they've done is they've taken that state limit and they added $600 onto it. And so now in that example, someone could make $975 per week. So whatever your state limit was, $600 gets added to it. The other thing they did is they extended the benefits to 39 weeks. And the third thing that's very important is now in all states, if you were an independent contractor, a 1099 worker, a gig economy worker, you now qualify in all 51 states when you include DC. Whereas before, only a few states allowed 1099 and independently employed businesses to qualify if you were a gig worker.
I got to stop you there because this impacts probably everyone on this phone call. Just to clarify, you just said that all states now are making eligible independent contractors?
Yes, they're required. So it's a very important preface to this slide. Yep. So all 51 states, including DC, these independent 1099 workers now qualify for unemployment.
Not only do they get the state unemployment amount, but in addition, they get the $600 amount, and they get both for potentially 39 weeks.
Yeah, that is exactly right.
So let's do the math on that one. Let's say your numbers, make it simple. It's $400 in some states. It is $400. Yep. That's $1,000 a week for 39 weeks.
That's correct.
Okay. Well, how we recoup from that one, I don't know. But What makes an independent contractor a real, let's go straight into this, commercial real estate broker? No deals are happening. No commissions are going to be secured. Potentially, I would argue against that. But are they eligible for unemployment?
Correct. So what happens here is now each state has a little bit different method of how they compute your state benefit. So let's use that contractor. So for example, in the state I'm in, we've researched, I don't know, maybe a dozen states, and we give the clients links to all this. And I can forward a good link to you to send to all the participants here. What happens in North Carolina, for example, they look at what did you make the last 26 weeks, whatever that number is. And let's say you made 50 grand. And then what they do is they take that number and divide it by 52. So basically they take whatever you made and cut it in half. So their idea was their state benefit was you were going to get half of what you were making, capped at, the state limit here was $350. So if you made more than $700 a week average, you're going to get $350 going forward. Now you add 600, and if you're in that situation, you get $950 in the state of North Carolina. So each of your states, you're going to do that same calculation. Most states are going to pay anywhere from 50% of what you made the last 6 months to up to 2/3, right? Somewhere in that range. You make some multiple of what you made, capped at the state rate. Well, now it's the state rate plus 600. Now here's a funny glitch in the bill. They got to the finish line, and Schumer's idea was, hey, I want people making, at least what they were, basically replace what their salary was before, to a maximum of their state limit plus $600. And no more. He didn't want to make them more than they were making at their old job. But they had a technical glitch in the bill. They didn't have it worded right. And they caught it near the end, and both parties, Republicans and Democrats, said, oh, yeah, we got to fix this so that they're not making more on unemployment for 39 weeks than they were at their old job, because we want them to go back to their old job when this thing's over. And they're all thinking, a couple months. And so Democrats and Republicans were united that they wanted to fix it. And the one independent senator from Vermont says, if you change it, I'm blocking this bill. So now it's actually possible to make more money on unemployment than you were making as a self-employed or a worker was making back at their job. In the state of Washington, they're now making $75 grand a year because they have the highest state benefit. So just a little food for thought. If you're an independent contractor in Washington, I would stay on unemployment for 39 weeks because that's good money. All right, so that's a little diversion. It's very important I preface this slide with the unemployment benefits. For everyone that is not getting paid right now, I think that's an important first step. And you can backdate your unemployment date to really the last time you got paid. So, for example, if you're a business owner and you took your last paycheck in the beginning of March because everything hit the fan and, us as business owners, we stop paying ourselves when it slows down, then you're going to want to, when you file for unemployment, say, hey, my last check was March 5th or whatever it was, so you get credit some extra weeks of unemployment.
Kevin, I got to stop you there. There's so much things that I think we need to clear up. So first of all, that last example, if you're a business owner and you operate a business and it's obviously been impacted by what's going on, you can actually stop paying yourself, yet still run your business, but the business is still going to profit though. So is that accurate?
Yeah. So you want to look at your state rules. We call this Move the David because I had a client named David that asked this question in the 2008 recession. And we looked up, so you got to check your state rules, and we'll give you a link here at the end of the webinar to see how they determine eligibility. Now, in many states, including North Carolina where I am, it is not whether you're working, it's whether you're getting paid. Incredible. So what's funny is that you can be a business owner in this state, you can be working 100 hours a week, but if you're not getting paid, you can collect unemployment. You want to check it with your state rules and verify that's the case. We haven't found one yet that doesn't allow this, but you want to be sure. Now, one other caveat, the one thing we have found, there are a few states where you can elect to opt out as an owner of the employment program, the unemployment program. I believe Washington's one of those states, for example. We ran into this. So you'll have to check. If you've opted out, you may not be eligible for unemployment now. But most states don't have that option, and good chance you're going to be good to go.
Okay, so there's a lot to unwrap there. We won't get to that right yet. But other people are asking, and I get this. Okay, so I'm a broker. I'm not getting commissions right now, and I don't foresee potentially getting commissions. Again, I'm going to argue this, those who think this way, for several months. What if I get a commission while I'm collecting unemployment? Then what?
Yep. So the way, for example, our state works is the business can have profit. If you don't pay out that profit, then it won't count. Now, in North Carolina, and this is true in many states, they have a certain amount you are allowed to make without threatening your benefit. In North Carolina, in many states, what they have you do is you've got to file out a weekly report to the unemployment to essentially keep your weekly benefit happening. So you have to submit the report on a weekly basis. And what we have to do on the weekly report is report exactly what income, if any, did we receive the past week. And if it's more than 20% of our weekly benefits, so in this example, roughly $1,000 a month, if you make more than $200, then they're going to adjust down your unemployment benefit. But if you make less than $200, then your weekly benefit stays 100% intact. So what a number of folks are doing, businesses, they're furloughing their employees while this is going on. And there might be some folks that you need a few hours a week, like your bookkeeper or whatever, to kind of keep things going, do some deposits, put a little something in QuickBooks. And so they're making sure that their weekly paycheck is less than $200 and the individual continues to make their weekly unemployment benefit. Needing the same here. Now, if you have a big deal and you choose to pull that money out of your company, that would be income that you'd have to report on your weekly unemployment statement, and it may hit your next week's benefit. So be aware of that.
What about the brokers? Fortunately, there still are brokers, agents out there that don't have companies. I know I vehemently tell them that's not the way to go. They're independent contractors. They're themselves individuals. They're getting paid a commission. Does that then disqualify them for the unemployment?
Yeah, if they receive the money, it will have to go on their weekly statement. And you have to look at your state rules. I don't know if that'll just kill next week's benefit or if that'll kick them off unemployment. You'd have to look at that.
Okay, I know that this is the most important slide. So Kevin, please continue.
Yep. Okay. So just knowing about the expanded unemployment is a very important preview before this huge thing that just passed last Friday called the Payroll Protection Loan. And this is what we'll spend the rest of our time on. So this might be one of the biggest deals of my career. And it actually could have possibly affect every single person on this call, which is pretty cool. In summary, we talked about unemployment. If your income stopped in March, I would file for unemployment immediately. Hopefully you're getting credit for the month of March as well. And you're going to want to continue to stay on unemployment through April. Now we segue into this thing. What we want to be doing is if your income's affected and you are paying either people or you are self-employed, you are eligible for this payroll protection loan. And what this thing is designed, this was created out of thin air and came into existence last Friday night, and it's supposed to be a business loan to cover 8 weeks of operations, most importantly, payroll. And what they do is first I'm going to talk in the context of a company, and then absolutely I'm going to pivot into how this applies to self-employeds. So what they want to do is they want to look at 2.5 times your average monthly payroll cost. So if you are a business, you look at all payroll costs that you had as a business owner, including your own payroll, and you're going to figure that out and multiply it by 2.5 times. Now, what payroll costs cover is all wages, commissions, et cetera, all employee benefits, any state payroll taxes, but not federal, state payroll taxes. So that'd be like state unemployment taxes you might have paid. And all of these get wrapped, and then let's see, company portion of retirement contributions, company health insurance, and any other insurances on your employees, including yourself. What they'll do is they're going to do a look back for 12 months. The application, by the way, is having you use 2019 data, FYI. And so if in 2019 you had $2.4 million of payroll costs, that comes to $200,000 per month. You take that $200,000 monthly average, multiply it by 2.5, and that comes to a $500,000 loan. Now, one adjustment that's important in there is if any individual, including yourself, made more than $100,000, you only use the first $100,000 in that calculation, right? So if someone was making $150, you're going to lop $50,000 off your average monthly payroll costs. So that's how that works. So 2.5 times your average monthly payroll costs. Now they have a provision in there that self-employed are going to be able to apply for this. That application is getting released next week, and so we don't know how it's going to be modified for the self-employeds. What I assume is going to happen is they're going to look at what you made in self-employment income, is how the bill's worded, last year, and give you 2.5 times that. Okay? If someone did get an SBA disaster loan, they can also refinance this into the payroll costs. I'm not going to spend a lot of time on SBA disaster loans, but those you apply directly through the SBA site, they're pretty darn cool. I've got a ton of clients applying for those right now. But these are only SBA disaster loans that were already in existence as of tomorrow, April 3rd. So you can apply for both these, this payroll loan and the SBA disaster loans independently. All right, so 2.5 times payroll costs. So the way it's supposed to work is they want to cover 2 months of payroll. That's 2.0 times your monthly payroll, and they're giving you an extra 0.5 to cover other fixed costs. Now, these other fixed costs that this loan can be used for include rents, loan interest on any other loans that are on your balance sheet before this happened, and utilities. And they also added a word, et cetera, and we don't know what the et cetera is yet. So with any tax bill that passes, they always add a paragraph at the end that they give discretion to Treasury to make adjustments on how they're going to execute it. So we're actually anxiously waiting that, and I've got some slides here to show what we're still waiting on.
So these are the brokers are saying, look, I don't have any employees, so I have just myself, but I do pay monthly research, monthly marketing, monthly, but they're all 1099s or vendor payments. They're not employees, but they're my monthly business expenses.
Right.
Is that part of this or no?
Doesn't appear to be. So one of the big questions they said on the bill that folks that are 1099 contractors are going to be eligible. And the question was, does the company that's paying the 1099 people get the payroll loan, or do the 1099 people get the loan? And it was very fuzzy in the bill. What Treasury decided to do, and why it applies to every one of the calls, the company paying the 1099 contractors, this doesn't get rolled into your payroll loan. The 1099 contractors get to apply for their own loan. It means everyone on the call, whether you're employing people, you get a payroll loan for yourself and any W-2 employees you're covering. Your 1099 contractors, they're going to apply for their own payroll loan. Yeah, on this.
Okay. Another question, Kevin. So to clarify that 75%, that has to be allocated to payroll. You can't have 60% payroll, 40% other, correct?
You don't know, and I've got a slide for that. But the intent of the bill was that, 2.0 is going to labor, and then the 0.5 is for this other stuff. They defined some of this other stuff. It's monthly fixed costs, but they added the lovely word, et cetera, that may modify that list. So the deal is you take your average monthly payroll costs, multiply it by 2.5, that's what you can borrow. And on the fourth bullet point you see there is if those costs are properly used in these buckets, and we assume 2.0 towards labor and 0.5 towards this other list of rents, loan interest, utilities, and whatever, et cetera is, then the whole loan could be forgiven. And so that's going to work. What they're going to do, how does this forgiveness work? They're going to have some sort of calculation, which we do not have yet, that measures your full-time equivalents over a period of time. They gave some fuzzy guidance in the bill saying, hey, we're going to look at how many people are on payroll in the 8 weeks leading up to June 30th of this year. And we're going to compare it back to 2 time periods, whatever's more favorable for you. You can look at the same time period back in 2019 or how many people you had at the January, February of 2020. And the idea is they want you to keep the head count intact for the months. Basically, what they're intending here is in May and June of this year, they want your head count to match either the same head count of last year or whatever you had beginning of this year, whatever's more favorable, right? Whatever number helps you the most. But this calculation is not out yet. And again, you borrow this money based on 2.5 times payroll, and if you spend it in this payroll and fixed cost categories, then it is possible for the whole loan to be forgiven. So that's what the intention is. But here's the deal. So the application just got rolled out in the last 20 days, and this is what it looks like. So applications can start getting submitted tomorrow, April 3rd, for businesses with employees. There's going to be another application for 1099 self-employed that will be out by next Friday. This is what the application form looks like. Can start getting submitted tomorrow for folks with W-2 employees. Let me show you how simple it is. So I've never seen a bill in my life where they simply are rushing to get money out the door and they're handling the details later. So literally all that happens, you put your business legal name, address, tax ID number, and who the contact is. Then you look at the next box as average monthly payroll. You just give them a number. 0 documentation yet. You multiply by 2.5, your next thing is your loan amount. Then they have a question here, how many jobs is this protecting? Again, not even telling you how to compute it, right? Whether it's an FTE or whatever. We're having our clients use FTEs just to be safe. And then what do you want the purpose of the loan? We're telling everybody to check everything. check, 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 check. And then other, I guess, just put stuff. And then all they're asking for is the owner name. Now, anyone that has more than 20% ownership has to put their name, social, ownership percentage, and your social and your address, whatever you can cram in that little box. That's it. You're going to sign some affidavits there below it saying you just check yes, yes, or no, no, no. And that's how simple it is. Page 2, this is where it really gets funny. You're going to sign a representation. You've read statements required by law, which include in this form. There's like 2 little pages of nothing. You'll comply with civil rights and other limitations, sure, so you won't be a racist. And then loan fees are going to be used for business-related purposes. I'm going to, where possible, I'm going to purchase American-made stuff. There you go. Got to get that in there. And you're not engaged in any illegal activity. Then they're telling you certifications. I'm doing this because the economy is making me do it. These funds are going to be used to retain workers. And then here's the funny thing. It's going to be documentation will be provided. They don't tell us what that'll be. It says loan forgiveness. You see right near the bottom. Loan forgiveness will be provided for the sum of documented payroll costs, covered mortgage interest payment, covered rent, covered utilities. And it says due to the high subscriptions anticipated not more than 25% of the forgiven amount may be for non-payroll costs. But again, they don't get very detailed here. So these certifications at the bottom are basically saying we'll provide any requested documentation later. Very fuzzy. And that is literally, the only thing below this is a signature line. So that's literally how simple the application is. I've never seen anything like this in my career. So this is what the application that's available for businesses with W-2 employees that can be submitted starting tomorrow at the earliest. And then we're going to have a new one in a week for purely self-employed, which I imagine will be similar. What I'm guessing is this box here, where it says average monthly payroll, is going to maybe say something like 2019 self-employment earnings. Again, I'm guessing here, multiply by 2.5, and number of jobs, they may leave that blank.
Kevin, what's your best guess? Because look, a lot of the folks on this line right now, they make commissions over $100,000. I mean, I would think so.
Yeah,
so
yeah.
Will they be capped at that $100,000?
That I can answer with a good amount of confidence. So in that example, they'd be getting, what is that, $25,000, $100,000 by 12 times 2.5, $21,000 loan in that example. It does bring up an interesting point where, folks that are self-employed, we have a few clients that fall into that, and we often have them pay their kids, that $6,000 a year so they can put money in the Roth IRA. It's a great little tax strategy. I imagine you'd be able to lock your kids' wages in your average here, maybe get a little more loan amount. So, yeah, real anxious to see next week's application. I imagine will be quite simple. But the point of all this, you can see just how simple this application is. They're literally asking for nothing yet at all. It's incredible.
Let's say you made a lot of money in Q1. You were one of those lucky brokers who kicked butt in Q1, or you're a Massimo coaching client that kicked butt in Q1. So now, can you still collect unemployment based on your 2019? That's what we're talking about here. Is that what you see happening next week?
Yeah. So here's what's interesting. So we got 2 questions: the unemployment and this application. So unemployment in most states use what did you make the past 6 months from the date you said you became unemployed. So you want it to be a high number just because you're getting your high state, whatever your state maximum is. But you don't have to make a whole ton of money to get the state maximum in most states. So, for example, if you're making more than $36,400 annualized in North Carolina, you're going to get the state maximum. But now you get the federal $600 thrown on top of it automatically. So your first question is, for unemployment, they take the trailing 6 months earnings from the date you said you became unemployed. Now, for this application, what's interesting is in the bill, they said, hey, payroll costs for the preceding 12 months. But when they did this application, they're having you use 2019 numbers. Again, this is where Treasury used the discretion that Congress gives them. I think the reason they did that is they didn't want people to worry about somehow getting a hold of a bookkeeper to prepare their financials through March 31st of this year, because they didn't want to do that. So in this application, they're having us use 2019 numbers.
Okay, so Kevin, can you double dip? What I mean by that is some brokers are saying, look, I'll collect unemployment, right? But can I also go back and apply for the PPP program, a payroll program as well? Can you double dip?
Yeah, so what I'm telling folks to do, so at a minimum, apply for unemployment now. Hopefully you get credit for some of March. You're going to remain on unemployment through April. Now, what this thing does, we don't have the details yet where it says you're going to retain workers and maintain payroll. But what the intention is that you bring all the laid off people back in May and June, and that probably includes yourself. Now, you don't have to bring the exact people back, but you got to get your head count and labor costs back. And it doesn't say, is it for all 8 weeks, or do you need them by the end of May and it counts for June? We don't have those details. So what I'm telling everyone is collect unemployment for March, right? Take your date back to your last time you got paid. Definitely keep yourself back on unemployment in April. But if you get this loan, you're probably bringing yourself back on the payroll sometime in May. Or you got to bring somebody back on the payroll. One of the questions I have is, hey, what are our workarounds to get our head count up? We don't have the calculation yet. Do you just hire your kids and get your head count back? We don't know that yet. But at a minimum, get yourself an unemployment now and plan to be there through April.
So it sounds like your plan is, there's a lot of things working here from a broker perspective. So there's a lot of moving parts, right? I got commissions in 2019. I got a big check in 2020. I'm getting checks in the future, but I'm still eligible for the payroll program. And in fact, I'm still eligible for unemployment. Is that correct?
Right. Yeah, exactly. So what I'm saying is let's take advantage of our free money, do the unemployment now. You're probably hanging out through April, and then apply for this payroll loan in the meantime. You figure you get your money hopefully by the end of April. You probably want to bring yourself or somebody back on payroll in May and June, because we want this loan here to be free money, not a loan, but free money. So since we want that loan forgiven, we're going to bring the head count back to turn this into a forgiven loan.
Okay, so here's the question, because it's really important. Let's say you have an employee and you let that employee, and during that time period, your payroll loan, you let that employee go, they left you, but you have another employee you're about to hire. You don't need that specific employee. It's just the amount, correct?
Correct. Yeah. So what I can tell in the bill, and again, we don't have the final details on retaining, but I haven't seen anywhere in there that says you have to bring the same people back. You just need to bring the head count back. And again, we don't have the calculation, but I have a number, I have 3 construction companies in Washington for whatever reason. We have clients nationwide. Well, their state unemployment payout is so high. These guys are literally getting double on unemployment than they were getting paid there. They're making like $40K working for my client in the field. Now they're getting $75 grand a year without a bunch of taxes getting pulled out. So literally their take-home pay is doubled. Well, they're definitely going to stay home and play video games and watch Netflix and not come back if my clients reopen in May. So they're going to have to get some other bodies in there to satisfy this loan. Because these other guys definitely, or if they've taken at least a second grade math class, are going to stay on the couch for 39 weeks.
I hear you. And a lot of guys, I understand, Ken, but there's a lot of confusion out there right now. People are asking, are you telling me that I can get a loan for the payroll of myself and pay myself going forward, and it's forgivable?
That is how this thing is written right now. And absent any information in there. So what I'm telling you is fire yourself, get unemployment now, and apply for this loan that's going to pay yourself going forward. Again, the application for the self-employed will be out in a week. But so I'm thinking sometime in April here, we're going to do a follow-up webinar and as we get these details. But right now, I'm telling you, get your free unemployment money and get this loan and turn this into free money as well.
That's amazing. That's amazing. And any income you may earn in commissions, that will disqualify you from unemployment, but it will not disqualify you from the loan because you already have the loan in place.
Correct. Yeah. Once it comes in there, absolutely. You have to report that in your weekly statement. And in most states, that's going to kill your unemployment benefit, at least for the next week, if not for a while. Yep.
And Kevin, you should just know that the comments coming in are that you are freaking brilliant.
Oh, thanks. Yeah.
The dude knows his stuff.
Yeah, no. And this is a rare case that, for the most part, Congress worked together. They did this as a 2-pronged program. One, they wanted to get this loan out to the businesses to get people back employed. Recognizing that some businesses, the folks are going to be at home because restaurants and dental offices, et cetera, can't reopen. They recognize that. And then the second prong of this, which was Schumer's idea, is like he wanted unemployment on steroids because recognizing that in the meantime, folks had to lay people off. And they all had bipartisan support that the self-employed need to be included in this because the world has changed it to more of a gig economy. So that's what they accomplish here. So they recognize that people will be getting unemployment and then hopefully back on the payrolls with these payroll loans. That's literally what Congress is wanting to accomplish. So, hey, let's help them realize their vision and let's do both, is what I'm saying here. But it means if the intent of this bill and the ethical idea behind this is, yes, do unemployment now. They expanded it for that reason. The feds are paying for it to not bankrupt the states. But this loan is designed that you are pulling the head count back in May, and that probably includes yourself. That's the best answer for us, too.
Okay. So, Kevin, a lot of folks out there are correctly structured as an S Corp. That's great news, folks, by the way.
Yep.
Okay. But they're the only employee of their S Corp. Are they still eligible for both unemployment and the PPP?
Yeah, it's a great question. You're right. That's exactly how we tell our clients to sign up. So what will happen is that S Corporation is going to lay off you, the owner, you as the employee. You get laid off from your S Corp, file for unemployment, and make sure that when you're filling out your benefits thing that you date it back to your last paycheck you received. And so as this stuff started to come out, I told folks, hey, stop paying yourself immediately. You're probably going on unemployment. Same advice we gave last year. So get on unemployment. Your S Corporation has laid off its only employee, which is you. Do the unemployment. Hopefully you get some March benefits, and then because if you're backdated to your last paycheck, and then you're probably staying on unemployment through April. That S Corporation is going to be the one applying for this loan if you're an S Corp. So go back to the previous slide. The S Corporation, that business legal name up top, is going to file for this loan. Conversely, if you're a 1099 contractor without an S Corp, it's going to be the individual, the self-employed person applying for this loan, but that's next week. But if you're an S Corp, you're applying for this loan for average monthly payroll, whatever your salary was back in 2019, divided by 12, right? A monthly average is what you'd put in here. If you paid yourself more than $100,000, it'll be capped at $100,000 annualized, $83.33 a month. You're going to get your loan for 2.5 times. Number of jobs would be 1, yourself. And that's how you do it. And then you put yourself down there as the owner, and that's how you apply. And then the idea is if you are granted this loan and get your funds, say the end of April or whenever it arrives, you're going to re-employ yourself. And to be reemployed in May and June, pay yourself at least as much as you were paying yourself on your 2019 monthly average. Use the other funds for your fixed monthly costs, and hopefully you'll get this whole thing forgiven.
Okay, Kevin, here's a great question. And David, thank you for the great question, David D. This applies to everyone on this call. So let's make this up. I made $100,000 in the PPP evaluation period. Therefore, I get the $20-something thousand loan, right?
Yep, that's right.
Okay. I was my own personal employee, so that's how it works. Unfortunately, the market's so slow, so I won't make that same amount going forward. I may not even make $20,000 I got the loan out for, so I can't really put that towards a quote-unquote payroll because I won't make any money going forward. So is that an issue or no, it has nothing to do with it?
Well, it has a lot to do with it. It's a great question. So what should happen here is you get this loan for $20,000. And the idea is that this loan will be used to employ the same number of people and the same costs as you did before, and you're going to employ them for the months of May and June. So what's supposed to happen is this loan is supposed to go towards that, and then plus an extra, the extra 0.5 to cover some fixed costs. If you choose to not use this loan for those purposes, then that's still okay. It's not illegal, but it won't be forgiven. Does that make sense?
Yep.
Still take the loan because maybe you had some other stuff you're choosing to pay with it. But now this is going to roll into a regular SBA loan. There's going to be no payments for the first 6 months, and then it's going to be an interest rate not to exceed 4%. We assume it will be the same 3.75% they're using for disaster loans. So if you choose to use this money for other purposes, then it becomes a regular SBA loan, probably at 3.75%. Payments will start 6 months from when you get it. And I think this one's like a 10-year term or something like that. So it's still a pretty good loan, but it's not free money, right? Because you didn't reemploy it and use the dollars for the categories they wanted you to.
I'm sorry, I gave some questions here. Is this ethical? Hey, that's a whole other discussion.
Well, it's a good question because we're a big deal. We don't want to do unethical stuff. So the idea is, they put it out. The idea is they want this money pumped in the economy to do jobs. So if you do it according to their categories, it'll be a forgiven loan. If you use it for different categories, it's not unethical, but it won't be a forgiven loan. It becomes a regular SBA loan, right? So that's my answer to that. What we do is we let you know the rules. the intent behind the law, and then it's everyone's choice what to do with it.
The application says current economic uncertainty makes the loan request necessary to support the ongoing operations of the applicant. How do they know if the loan is necessary in my business?
Yeah, and the way I look at that is who all should go for it. If your cash flow is being affected, that provides enough economic uncertainty in my mind. And the other idea is they're saying, hey, if your cash flow is affected, they want the cash flow to continue, the economy to continue. And the other thing, again, the big intent behind this is to keep the same head count to the extent you can. It's a good question, but I have clients, and I guess this would be my situation, where we're able to go remote and still work, but our clients are having a hard time paying. So our cash flow is being affected. We're still working and busy, and I want to keep my team, because we have dentists and restaurants and all that, cash flow is getting affected because they're just getting smoked, just hammered.
Hey, and everyone, you need to, great, again, David, thank you. Guys, just as you're taking this advice, number one, talk to your personal accountants and financial advisors. And number two, make sure if you fire yourself, you got to understand what's happening with your license, with your licensing board. So just don't go off to run to unemployment right off the bat. Understand what you're doing before you actually do it. Really important. So thank you, David, again, for great, and that David D, a coach at Massimo Group. Thank you so much for that. Okay, Kevin, just two more questions. I know you got to go. We got a lot of things right now that regarding this S Corp, still confusion. So if you're an S Corp, can the S Corp continue to pay your salary if you do all this? They have to, right? That's part of the PPP.
So again, if you're an S Corp, my advice is you lay yourself off effective your last paycheck in March, stay on unemployment through April. You get this loan. The idea is you rehire yourself for May and June and pay yourself at the same rate you were before, up to $100,000. You don't have to go above 100. You have to go up to either the lower of what your salary was on a monthly average. No need to go above 100. So, and that's what this loan's designed to do, right? You bring your head count back on board once you get these funds.
Hey, Kevin, I want to give you a quick kudos. At the Massimo Group, our whole mission is to transform the lives of our clients. And I'm telling you, this webinar has transformed so many people, given some relief, some hope that they recognize now there is, for those that aren't positioned for this. I'm sorry if you're not positioned for this, you should be. But if you're not positioned for a market downturn, there are opportunities here to help you move forward, and that's the key for it all. So, Kevin, I can't thank you enough. Don't go anywhere yet, folks. We got a couple of things to cover. So, Kevin, I cannot thank you enough for your time. I know it's incredibly valuable. I just honor you as a person and as a coach to me. So, again, thank you so much for the insight. And yeah, folks, Kevin, you heard Kevin say it. In a couple of months, maybe less, we need to do this again just to update you on what's going on. So, Kevin, you and I are going to talk tomorrow, okay?
Yeah, you got it. All right. Appreciate it, guys. And always a pleasure. And talk to you again when we have some more info. So everybody hang in there. We'll get through this.
Okay. And everyone else, while you're on the line, I think we answered most questions. Let me give you some what's going to happen next from so many people ask these questions. What about the recording? What about this? What about that? First of all, I cannot stress enough, please listen to these. You need to talk to your personal financial advisor and your personal accountant before you act. What Kevin's sharing, yes, he has clients all over the globe. He's sharing what he knows, and you can tell he knows a lot. We get that. But talk to your folks first. Second, as David Dirkschneider suggested, make sure you know what you're doing before you hang up that license. It's so critically important that you know what you're doing. The recording of this will be probably positioned on a Facebook group called CRE Mastery. That's CRE Mastery. We'll put it there probably by tomorrow is our goal. We've got a lot of things going on right now at the Massimo Group. And last but not least, look, this is the first time I've ever announced this. So this is something we've decided to do. I always pivot when I see the things need to be taken care of. I made a big pivot this 10 days ago and I told my entire company, stop doing what you're doing. People need help. Let's figure out what to do. So we create the most comprehensive group coaching program we ever have with 3 times the amount of content, new content we never put out before, with twice the number of coaching, and you have access to it for the entire 2020. That is launching next week. You can join it anytime you want. If you go to massimo.coach, this is a new company from the Massimo Group. It's all about a curriculum to help you get positioned to take on the market and be a dominant player moving forward. So check out massimo.coach. There is some technical issues with some big folks we're hearing. So just if you're having an issue, email me, email us. We'll get you access to the information. But here's the key. It's a beta test. I'm writing new content every night. I'm back to my 15 hours a day like I was when I started this company in 2008. Actually, it pumps me up. And for the first time, for those who matter, for the first time in 8 years, I will actually coach this program for the first several months to make sure everyone's up to speed in what we're doing and how we're doing it. We're here to help you. We want to give you more content, more access. And once you become a Massimo member, those members can tell you we are saturating them with resources and help and helping them move forward. Because what's going to happen is just going to happen. Half of the people on this call, whether we like it or not, will not be here in 6 months because they're not positioned properly. We don't want that to be you. We want you to forge ahead. So I'm sure you found this valuable, this coaching content and this information on the new programs. Go out, all fire yourselves. No, I'm kidding. Go out, talk to your folks, figure it out, get the help. Is it ethical? That's up to you. Is it legal? It absolutely is. And look, the government's doing this because, let's face it, in 2008, who got all the money, right? The big corporations, they bailed them out. This time they're saying, hey, bail out the small business owners, help them out. They're suffering. We're all suffering. Take advantage of what your government is providing for you. Nothing wrong with that, okay? God bless you all. Be safe. If any questions, please contact me directly. I am answering everything myself. Get to me on Facebook. I answer all the questions there as well. Massimo members, you know I love you. Massimo coaches, great job today. Take care. Bye-bye. I want to thank you for listening to this version of the Massimo Show. And please, please go out and share this with your friends, your colleagues. Heck, share it with your dog. Just share it. And more importantly, just give me some feedback, good, bad, or indifferent. We all grow from understanding what our audience wants to hear. So until next time, this is Rod Santomassimo with the Massimo Show.